You're with us here on Midcap Radar. 30-point odd gain on the Nifty, 10,327, and it has not really seemed like it is going anyway in a big trending kind of a fashion, either up or down, although we've had a couple of these up and down moves from the word go today. So, good afternoon.
Hi Prashant, good afternoon. And Hero Moto is in focus. They've launched their new 125cc scooter called the Destini 125. So let's head across to Parikshit Luthra, correspondent, who's in conversation with Sanjay Bhan, the head of sales at Hero Moto.
Hero MotoCorp has launched the new Destini 125, and they hope to create a lot of buzz with this new machine in the festive season. Joining us right now to talk about the vehicle and the mood in the festive season, which has not been very good so far for two-wheelers and passenger cars as well, is Mr. Sanjay Bhan, head of sales, Hero MotoCorp. Mr. Bhan, thanks very much for speaking to CNBC TV 18. Tell us about this new vehicle, Destini 125. What is the strategy going forward? Which is the segment you're looking at?
Broadly, I think, like we explained during the course of the media briefing, Destini 125 is essentially going to target the 125cc, which is the fastest growing segment in the scooters, as you know, today. 77% growth in the first 6 months. So we do expect a lot of action there in that segment. We saw an opportunity. This model has been planned to get into that and participate in that growth story. Apart from that, we also have seen a lot of movement and traction from consumers in the 100cc, 110cc category who are seeking an upgrade to the higher level. So we do expect that Destini will change all that and enable consumers to move and upgrade to a new level, which is clearly a couple of steps ahead, as the name says, do kadam aage. So Destini 125 is clearly do kadam aage on mileage, do kadam aage on styling, do kadam aage on power, do kadam aage on convenience. So, it's got it all, and hopefully the consumers will be as excited as we are about it.
Yeah. Which are the markets that you'd like you to focus on? Where is the demand for this likely to come from?
The market for Destini 125 is no different from the market for rest of the scooters that are selling today. I think most of India today, particularly in South and West zone, there's a lot of scooterization that has happened. A lot of urban markets and semi-urban markets have started levitating more towards scooters, and we do see that there's a lot of contribution and play of scooters in those markets. There are other parts of the country which are still very strong motorcycle markets where scooters haven't been able to have that kind of play. So we would like to participate in those markets where scooters are already showing a lot of traction and there's a lot of movement. As this model is clearly slotted and positioned for families, and because there's a lot of family usage, multiple usage within the household. It's not just one person riding a scooter in families today. We have multiple people, a father, son, daughter, mother. So we would clearly be engaged with the families and give them an absolutely brilliant option, because it's not just strong and sturdy like Malu was explaining. It's also about durability, it's also about convenience. The i3S technology brings it to life.
Talking about the i3S technology, if you can just show us how this works and why do you think this would be a game changer?
It's a very simple technology. The i3S, the way it works is the moment you are at a traffic signal, as Marcus was explaining in his presentation, all you need to do is de-accelerate, and the vehicle cuts off, the engine cuts off. And the moment you want to take off, and once the signal is green, all you need to do is to throttle up and you just move along. So it's absolutely hassle-free, it's completely convenient, and I'm sure the customers are going to like it.
Okay, we'd just like to ask you an industry question. The sentiment for passenger vehicles has been down for the last couple of months. We've seen a drop in retail sales as well. What do you think has been the reason for drop in retail sales for the entire industry as far as the scooter segment is concerned?
Look, I would not want to comment on passenger vehicles. I'll just stick to two-wheelers. I think fundamentally in the macroeconomic level, there is absolutely no change. The market is pretty robust in terms of growth. Signals pretty strong. We've had a very good, strong rally in the first 6 months. We've been growing consistently. Yes, surely, I think the festive season hasn't had the dream start it typically has. I think there have been a variety of reasons. We've been talking about various things like the insurance hit that started off on 1st September when the insurance rates went up, and there was this compulsory insurance because of the guideline of the honorary Supreme Court, which was there, a 3,500-4,000 rupee hit to the consumers, and subsequently there was some amount of concern around the increase in rates on the compulsory personal accident insurance policies. The cover went up to 15 lakhs straight from 1 lakh. Then it was a compulsory. Initially, it was indicated as a compulsory thing for 5 years, and it kind of got mitigated. But all that confusion obviously must have shaken the market a little, and that's clearly evident in how everybody has been reporting their numbers. We thankfully have had a more like a flattish time. It's not been so bad at all. But yeah, we do expect things to turn around. We've seen the last 3-4 days of the festival, we saw a lot of recovery. So we're quite bullish about how it's going to go from here on. And hopefully we'll end the festive season, like I mentioned earlier also, between 8 to 10% growth.
So that's going to be your outlook for the festive season, 8 to 10% growth?
That's right.
Yeah. And talking about festive offers, has Hero MotoCorp come up with several festive offers to boost demand this season?
The only thing we've done is only confined to a few select states on scooters. Beyond that, really nothing, because yeah, there is this thing that we do for our customers, the Good Life customers that we have, or we've just been offering small stops for customers to get free, service policies, etc. So that's something which is routinely done as a normal course, but nothing outlandish. And
What could be?
Okay, that's a 125cc scooter launch by Hero, and also some commentary on festive sales. I mean, Hero essentially blaming the insurance costs going up for the slow start to festive sales, but 8 to 10% growth is what they're expecting during these months. Okay, that's Hero MotoCorp. There are two numbers which came through while we were on those sort of visuals and conversation at Hero. GSK Pharma is at the bottom of your screen. Numbers are lower Y on Y. And the other one was Alembic, which reported numbers, and there is a huge beat. I mean, actually, huge growth. We don't have sort of expected numbers for Alembic Pharma, but compared to the same period last year, it's a big one.
Expectations from ICICI Securities, which was at under 900 crores for revenue. So at 1127, it looks significantly better.
Okay.
And in the press release, actually, the management has said that a one-time supply opportunity arising due to a product shortage in the US resulted in the higher profits this time around. So maybe the stock is factoring in the fact that this is not the normal course of business.
Possibly.
And a one-time this quarter.
Possibly. So what we'll do is we'll try and speak with the management at Alembic and try and understand I mean, just to break the numbers down a little bit more. The market is come off again. I mean, we're basically down to being flat, 10,312. So it's not selling off. It comes a little down, gets picked up and pulled back higher. It's happened a couple of times already. Ashwini is with us. Ashwini, thanks very much. Your sense of things now?
See, basically sideways. I think the morning range we gave was about 10,250 to about 10,400. Now, what is possible is that we came hurtling down from 10,700. So maybe, the market's kind of finding support, and just one day of range bound wasn't enough. So that way, you can say that we are not making fresh lows. Having said that, I think banks is the place where people should try to go long. So BOB is a buy with a stop of 100, target of 112. PNB is a buy with a stop of 65, target of 71. And SBI is a buy with a stop of 260, target of 274.
Okay, fair enough. Indiabulls Housing, Ashwini, any thoughts with this move? Did you put out a trade earlier?
See, basically, all of these NBFC, housing finance, etc., they are going through a pullback. They have collapsed. And, if they have to go up sustainably, it'll take a while before that happens. So these are all, pullback moves, short covering, and the trend is firmly down. There shouldn't be any question about that.
Maruti, Ashwini, any thoughts? Did you put out, do you have a trade?
See, again, these are all stocks in massive downtrends. And basically, pullback rallies is all you are getting. 1% higher for something that's fallen 30% isn't much of a upside. But having said all of this, the market is extremely oversold, and somewhere at lower levels, 10, 250, 300, it's refusing to go down. So this is not a great point to be thinking of short positions, etc. My sense is that we need to go up before we come down sustainably.
All right, Ashwini, thanks very much for joining in with your trading ideas. Let's take a very quick break. Up next, we'll focus on all things global. Richard Harris, CEO of Port Shelter Investment Management, will join in. Stay tuned. Hi, welcome back here with Midcap Radar. For our own market, just minor gains actually on the frontline indices, and the Midcap index underperforms. That's been the story actually through the day, and as we speak, another nick coming through in the frontline indices. But we've underperformed Asia and Europe largely through the session today. So let's invite Richard Harris, the CEO of Port Shelter Investment Management, to give us a sense of what's happening in the global space and where investments look to be headed. Richard, hi, good afternoon. We've seen a big rally in China this morning, and this, of course, comes on the back of the move that we saw on Friday. There's a lot of confidence being drummed up, support being given to the market from the Chinese government itself. You expect this rally to last much longer? I mean, does it have more legs? And also, how's the global setup looking to you now?
Well, I think drummed up is the right thing. The Chinese market has been declining and declining quite fast, pretty well all year, and in fact for a couple of years, and getting almost to quite critical stages. And I think the Chinese authorities, in conjunction with trying to put more liquidity into the economy itself, had probably felt the market had really gone too far, too fast, and was maybe likely to cause some damage to the economy itself. The Chinese have done this before, of course. They brought in the national team, as they called it, in 2015 when the market collapsed severely to try and buy the market at the bottom, combination of banks and state agencies. And it looks as if this time they've come out, certainly with leaders of state agencies, coming out to try and put more confidence into the economy. But I've no doubt if they feel strongly about it, that they will also, again, get the banks to look to buy the market. So I see this probably as being a near-term bottom. I think they were really waiting for a moment that was quite low for the market to turn. Valuations are low in China, and there probably is a bit of fundamental reason to buy, if only because it's lagged so very badly.
So, Richard, sort of Chinese market turning around like this, does it give out a signal to the rest of the emerging markets as well, or no? I mean, this is just purely one of what's happening with China.
No, I think it probably will add some confidence to other markets as well. Not necessarily because buying in China is likely to impact those markets, but just to add a bit of sentiment to sort of feel that maybe somebody out there loves us, that there is a little bit of support going on. So I can see it being positive in that sense. I mean, there's no doubt that if you look at the United States, the economy is strong, is still strong, and the reasons for that are fairly clear-cut. But it's not been the case in China, where the economy has appeared to be quite weak. So the stock market has followed the weakness of the economy down. The currency has also appeared weaker as well, although it hasn't yet passed that magical 7 handle. And I think the Chinese authorities just feel enough is enough. Let's give a little bit of support to our market. But I'm pretty sure that if they follow through, and it'll be tough for them not to, that it'll also give a little bit of succor to other markets around Asia.
Richard, many commentators nowadays are saying, well, emerging markets have a liquidity problem. I mean, they refer to that in the context of Indian equities as well. And I heard this morning from someone on TV saying essentially that the U.S. economy needs to become a little weaker for flows to come back into emerging markets. I mean, does that square according to you?
Well, you shouldn't believe everything you hear on television, of course. But I think that there is a linkage there. But of course, I think also, too, if the U.S. economy is weaker, there may be a concern that perhaps, the global markets are going to be weak, and that may not be a good sign. I mean, at the moment, the U.S. is undoubtedly the engine of growth for the rest of the world. Europe is contributing relatively little as they deal with their own issues, most of which are self-inflicted. So I think strength in the U.S. is still important. What really needs to happen is perhaps a little bit more risk off, a little bit more confidence in the emerging markets. Don't forget a small amount of liquidity moving out of the U.S. into emerging markets quite important to emerging markets. But I think if you get significant weakness in the US, you're going to have a problem. The more likely scenario is that maybe people start feeling the US is a bit expensive, then they look to rotate. But I think weakness in the economy in the US would be bad for everyone.
Richard, thanks very much. Appreciate you joining in with that quick commentary and perspective on things. We've got a 3-point change up on the Nifty, so it's basically back to being absolutely flat. The Bank Nifty is up 0.6, which means it's off the highs by about 50 points or so. And the Midcap index is down 0.75% as well. So it's again swinging to the other side. We take a very quick break here. We come back and we have more on the other side. We get you snippets of an exclusive conversation that we had with KVS Manian of Kotak Mahindra Bank. Stay tuned for that. Okay, we've got 5 points on the Nifty, so it's a pretty steep climb down that we've seen coming through on the indices. 1,400 stocks are lower and about 650 stocks are higher. That's about 2.2:1 on the advanced decline in favor of declines. The last 2 weeks, remember, have been tough for the NBFC space, particularly the housing finance companies. Most of them have been facing liquidity issues. RBI has also taken steps to ease the woes of this in the space, yet concerns linger on. My colleague Nimesh Shah caught up with KVS Manian of Kotak Mahindra Bank and began by asking him what he makes of the current crisis or the crisis of confidence in that part of the market. Listen in.
To begin with, I think most people who have seen the earlier NBFC crisis to now, I would like to draw some differences between the two. I think the key differences between the two are, one, at that time many NBFCs were far less capitalized than they are today. I think the capital adequacy levels are much better today. Second, I think at that time far more NBFCs were reliant on public deposits. Today most of the NBFCs are largely on the wholesale deposit. There are few deposit-taking institutions, public deposit-taking institutions, but largely they are more wholesale funded, second. Third, I think the asset side of most of the NBFCs, large part of them is retail, and retail credit has, has been quite robust. The credit quality has been quite robust. So I would like to believe that their credit quality on their asset side is fairly good, and therefore I don't see this situation as a solvency issue, unlike the last time. That last time there were solvency issues with this sector. I think that is not the case this time. I think they are reasonably solvent. Yes, there is a liquidity issue because I think the ALM mismatches and the funding mismatches are causing the liquidity issues. And I think liquidity issues are more easily solvable than fundamentally solvency issues. So I'm more optimistic that with various measures, announcement by several banks that they will buy portfolios, RBI announcing some benefits to banks who take on NBFC lending. I think some of these measures incrementally, each of them helps. Okay. And having said that, I think on a medium-term basis, there is need to look at the ALM regulations for this sector. Okay.
Sir, I'll come to you about the regulations part in a bit. But first, I was reading a few reports which indicate that over the next couple of months itself, there will be, redemptions or rollovers to the tune of close to 70,000-80,000 crores for the NBFCs and housing finance companies. Yeah. Is that going to be a bit of an opportunity for corporate banks like you all, where you look to securitize some of the loans of NBFCs?
Yeah, that's right. I think many banks are trying to do that, not only us. I think many banks are trying to buy out portfolios. So one of the solutions that NBFCs have in this situation is where they can sell their portfolio and create liquidity instead of keeping them on their balance sheet and funding them on their balance sheet. So I think it's a good solution for many NBFCs in this current situation. And I think many banks, including us, will look for this opportunity. Okay. I think it's a win-win kind of an opportunity. Is this,
Mr. Manian, is this also a great opportunity for banks like Kotak Mahindra Bank to look at buying out NBFCs? Because I was just looking at valuations of most of the NBFCs after the recent fall. Many of them are like below 1.5 time book for FY20. Is that going to be given that you look at investment banking as well very closely, is that going to be a big opportunity for not only Kotak Mahindra Bank but largely corporate banks to look at buying out NBFCs?
So on a broad basis, I think the valuations of NBFC as a sector have taken a knock in this. I think the 4-5 times valuations have now probably closer to 2-3 times 2-3 times book kind of valuation. This will give rise to opportunities on consolidation. Whether we ourselves do anything or not, but I think as a general trend for the industry, I think there is an opportunity to look at some of these NBFCs who can be now, the buyers might find them more attractive than they found when they were listed at 4 to 5 times book. I also see still continued interest of private equity players who might still be interested in acquiring these platforms as part of their financial services platform that they build.
I want to touch upon the book, where you've written about the corporate banks and the future for corporate banks and how the corporate banks are going to shape in the future. Broadly, if you can tell us what are the key things that you think are going to shape the future of corporate banks in India?
So actually, this is the book we just published. This is something that we have published with Economist. Economist Intelligence Unit has they have put it together for us. The introductory article is by me, and then we have got 5 experts.
All right. Also, take a look at some of the stocks. A to Z spiking higher. It's a small stock, 160 odd crores, but they won a 225 crore order. The market itself now picking up pace. So the frontline indices up over 1/4%. In fact, the Sensex has notched up 120 points, and a lot of it has come in just the last few minutes. Or even the Midcap index, which at one point was down almost 1%, that index has now cut its losses, just down about 1/4% now. And the banking stocks looks like they're taking off yet again. So the index, the Nifty Bank, is up 1% now, so almost 240 points higher. And look at some of the banking names. So ICICI Bank, etc., now moving to the high point of trade. In fact, ICICI Bank now up about 4.5%. Other than that, some of the auto stocks also doing well. So Aisha, Maruti, both of them would pretty much be near the highs of trade. We'll wrap up then on Midcap Radar. Your stock follows next.